I want to start talking about the infrastructure bill, which you voted to pass last Friday. And this certainly marks a victory for President Biden, especially given the timing. He's dealing with falling approval ratings and some losses in key elections over the last week. How much does this win mean for the Democratic Party?
I think it means a lot. It was a very good day, as you pointed out. The prior election day, Tuesday, in which there had been a pretty big loss in Virginia and a very narrow escape in New Jersey, had been a down day politically. But by Friday, of course, we passed the biggest investment in American infrastructure ever, and it was forward-looking, meaning it wasn't just roadways; it was broadband and next generation energy and electric vehicle infrastructure. Coincidentally, that day was also remarkable job numbers showing an increasingly strengthening economy and a record in the stock market. So again, I don't predict the future, but hopefully the low point was it was some point midweek, and hopefully the benefits of this infrastructure deal will. And this is really kind of an important issue, will become evident to people sooner rather than later.
Critics of the deal have questioned the White House's insistence that the measures in the spending bill will be fully paid for. What assurances can you give on this front?
Well, so we're talking about two different bills here. The president has been adamant that the bill that we have not yet passed, this is the Build Back Better bill. This is the one that is anticipated, unlike the infrastructure bill, to pass on pure party lines. The president has said that that will be paid for, and of course, fully paid for. And of course, we're waiting, and that's sort of one of the gating items between now and its passage for a number of members. There is a debate over the infrastructure bill. You know, there are estimates that it may be a couple $100 billion shy in terms of its revenue sources. Look, at the end of the day, that's really more a political point for the Republicans, who just a couple of years ago, created $2 trillion of deficits over 10 years. To do nothing other than to deliver a tax cut, which provided about 80% of its benefit to the very wealthiest Americans. So, the deficit and the debt is something that we should never forget. But in terms of return on investment, there's very few things quite as powerful, as effective as actually bringing our infrastructure into the 21st century.
Well, you mentioned the second pillar of this Build Back Better program. So we've got the infrastructure bill, which passed on Friday, and now we've got the larger bill, which is focused much more on social spending. What are the chances that this bill passes, and in what form?
Well, I think they're reasonably good. And one way to think about the difference between the two bills is that what we did pass on a bipartisan basis was really about traditional infrastructure. That's roads and bridges and broadband and yes, electric vehicle charging stations, forward-looking stuff. The next bill that we're talking about, which is larger, I wouldn't so much characterize it as social spending. I would characterize it as investment in Americans, in people. So universal pre-K and an expansion of the child tax credit, which is cash for families, middle class and below, who are raising children. You know, when you look at the stats, the United States spends less money on its youngest citizens than any other industrialized country out there. And the problem with that, set aside the moral issues, the problem with that is a competitive problem. If we continue to underinvest in our people, eventually our innovative capacity, our business starting capability, and our economy will begin to suffer. So I think there's a powerful logic for this country finally to begin investing in its youngest citizens.
Well, if I look at the support for this bill within the Democratic Party, the whole process, the negotiation process, has highlighted some pretty big divides within the party itself between the more progressive wing and the more centrist Democrats. As we head into the midterms, are you worried that this infighting could damage the chances of the Democrats retaining control of Congress?
Well, were we not to get something done, and remember, we already got the infrastructure deal done, were we not to get that done, yes, we would deserve our fate in the midterms. But I remain optimistic that we're going to get that Build Back Better bill done, that Americans will see what universal pre-K means. They will see what better access to health care means. And my guess is that the politics of delivering that kind of policy are pretty good. But, I have to comment, it has been a rough road. It's been a heck of a negotiation. Of course, in Washington, negotiation, which in the business world is known as precisely that, is known as disarray and chaos, right? If you look at the Democratic caucus, it is a remarkably diverse group of people. I mean, consider the difference between me, my friends on the Congressional Black Caucus, deep progressives like Ilhan Omar, conservative rural members like Cindy Axne. We are so diverse in our origins and our philosophies that, yeah, the negotiation is hard. But if we deliver, I think at the end of the day, that's going to be pretty good politics.
Let me turn to financial markets now. You mentioned the strength of the U.S. economy and stock markets, which have hit new record highs. Yesterday, the Federal Reserve, in its financial stability report, warned about rising asset prices. I'm wondering how you think about the responsibility and who is responsible for managing these risks.
Well, with respect to asset prices and asset bubbles, there's no escaping the fact that low interest rates and free money, which is something that we have had now for many years, creates asset bubbles, and not just asset value bubbles, but remarkably odd financial behavior, whether it's the sort of near cult of the SPAC or the dumping of money into meme stocks. There are downsides, or risk, perhaps I should say, to free money and zero interest rates. And what I feel very adamantly about is that, because you asked who's responsible for that, the monetary authorities are the Federal Reserve. I fought my entire career to make sure that monetary policy does not get influenced by the tender mercies of political people in the Congress. But I think, as we all, those of us who watch the Fed, see, that's we're taking a turn there, and hopefully that will begin over time to maybe take some of the risk out of what are pretty clearly some asset bubbles out there.
Lastly, you have said in the past that you support the democratization of finance. Do you think that Robinhood is going about democratizing finance in the right way?
Well, I'm of two minds on Robinhood. On the one hand, it's neat to see lots of people who never imagined they might participate in the capital markets participating. And if that translates into long-term prudent behavior and more savings, right? United States, the Americans are famous for their lack of savings. Maybe not right now, but in general, that's all a good thing. What troubles me about Robinhood is that I think that they encourage, through their psychological prompts, through the little champagne corks popping, they encourage behavior that, as a former banker, I can tell you is probably not prudent investing. Lots of trading, and there's just a ton of studies on this. Lots of trading will not in the long run make you a lot of money. And so, again, that isn't to say that Congress should step in and make that illegal or anything else. But, the financial markets tend to teach expensive lessons. And my hope is that over time, people learn that investing in a stock you've never heard of and, selling that 401k to do so is probably going to end up hurting in the end.